Hello, this is Larry East with your weekly rate update for the week of September 24th. It was a busy week, so I'm jumping right in. The big thing that went on this week was the meeting of the Federal Reserve. So every time the Federal Reserve meets, it concludes with a policy statement and a rate decision. As expected, the Federal Reserve increased the Fed funds rate 0.25 or 1/4%, and the markets do anticipate a increase of another quarter in December at the December meeting. The Fed is projecting, the majority of the Fed members are projecting 3 more rate hikes next year. So for 2019, another 3 rate hikes. And the Fed, when they increase interest rates, it's an attempt to slow down the economy. The economy is doing well, employment's doing well, and they're trying to slow that down to curb inflation. So that's the main reason they do that. And the Fed, in the press conference, after the meeting, the Federal Reserve does a press conference. In the press conference, Jerome Powell, the chairman of the Fed, said that he does not believe inflation will surprise to the upside. He feels like inflation will stay in check, or basically where inflation is now, or moderate. So that was good news for the bond markets, because as we've spoken about, interest rates are very, very sensitive to inflation. So anytime they think inflation is going to increase, rates will increase to compensate for that. Speaking of inflation, we also got the Personal Consumption Expenditures Index, which is the Fed's favorite gauge of inflation. The good news on this report was that they look at the core rate, which strips out food and energy, and it was at a 2% level, and it remained at 2% year over year. And the Fed Reserve has a 2% target for inflation. So the report came out after the Fed meeting, but seems to line up with the comments from Jerome Powell regarding inflation moderating or not surprising to the upside. We also got second quarter GDP, and this was a great report. The reading came out at 4.3%, which is the best GDP reading in almost 4 years. So great news, and it confirms the Fed increasing interest rates because the economy is doing better and doing well. Now, interest rates did increase slightly this week, but given the month of September, as we've spoken about, wasn't very friendly with interest rates, and they definitely increased. So only a slight increase this week will take, and most of that was moderated by the comments out of the Federal Reserve. Ton of housing news this week as well. So let's go through it. The Case-Shiller Home Price Index, this was for July. It did show, which we've seen on a few reports, home price appreciation moderating slightly. Now, I wanted to clarify, home price appreciation moderating is not home prices decreasing. It's slowing down the pace of growth. So as equity's increasing, it's just slowing that down. So it's still showing growth in home prices. This one on the national level moderated from 6.2 to 6% in July. So June was 6.2, July was 6%. The FHFA, which regulates Fannie and Freddie Mac, has a similar home price index. This is single-family homes only conforming loan limits, since they're the regulator for Fannie and Freddie, and theirs moderated slightly as well. Theirs was from 6.5 to 6.4 in July. So similar pattern there, which we've seen on some of them. So it seems that home prices are beginning to moderate, and these are still great levels. I mean, historically, if you get 6% appreciation in home prices, that's a win, and we're still in that range. I did want to mention too, on the Case-Shiller, LA and San Diego are the 2 metropolitans that they measure closest to us, and they are both over the 6% growth year over year. Good news there. Pending home sales. This is on existing homes. Pending home sales slightly decreased, and they are about 2% lower than they were last year. That's driven by increases in interest rates and also very, very tight inventory. As you remember, the existing home sales report, the inventory was slightly over 4 months. If we look at new home sales, we got new home sales. They are up 12% since last year. Prices on new homes are up 19% since last year. And it's showing builders are building because they have a slightly over 6-month supply of new homes. So not the supply constraints we see on the existing side. That's a wrap on this week. I know that was a lot. Thanks for hanging in there and listening and watching. Thanks for your feedback. If you need anything, I'm here to help. Thank you.